Hi, I'm Bossman Forex from Alpha Capital Trading, and here's why I took my US30 shorts today. So, as you can see on the charts right now, I have US30, the screenshot from the trade that I took. And as you can see, I took some shorts, sell one lot after we had break of structure here. And my bias was to take this trade all the way down till to probably break this and continue to the downside. So as you all know by now, we'll be jumping straight into TradingView to try and see what is it that that told me to take this trade. So if we zoom in, of course, you notice that I've taken it from the 30-minute because of clarity. But if we jump into the 1 hour first, you'll notice that even from the previous summary that I did mention that the reason why we pushed higher here was because we failed to break and close below this point. But what you'll also notice is that this time we tried to break but failed to. But during FOMC, we did break this area. And so this gives me a hint that we might probably get a bit more downside. And then, of course, we did drop all the way down till this point. And while we broke it, again, with this push, you will notice that we did not close below it. That's why we had to go up to look for more orders so that we can try and break it once again. So expectation from this shorts is going to be that we'll not only break below, but we will close below this area. Currently, we are sitting at a very interesting point. So I have chosen to take partials on this position and shift my stop loss just around this area. And the reason now why I took the trade is that has given me an idea of why I'm taking shorts, right? The second reason why I was taking the shorts was because of the concept I teach called the failed demand zone. So if I can turn everything back on, you'll notice that we have highlighted a few things. So I've highlighted the push from the FOMC. Let's jump into M30 so that you can see how the markets formed. So if we now look at M30 here, you can see that every single time that we are breaking a demand zone, in this case, when we take out a demand zone, even let's start from here, we take out a demand zone that was supposed to be respected. And if we break below it, we have a bit more momentum to the next obstacle, right? So we have this and this. So we had this as an obstacle, we broke below it, and that means we head down to the next obstacle, which is down here. Again, we have a demand zone here, and the demand zone is broken, so we push all the way down to the next obstacle. So the common thing that you'll notice from all these instances is that every single time we have a demand zone and the demand zone fails to play its role as being an area for buys, the moment we break and close below it, the structure shifts and we get the overall push that is happening. So in our case here, we had the drop that, as we've seen, broke below that level that we were talking about. It was around here, I think, somewhere around here. So once it broke below, the daily candle, of course, pulled back up so that it can close, and then we closed around here, and then we left behind this zone. Now, as price formed this area here, what we were left behind with is, as price was coming back here, our expectation is that if this is the demand zone, we get a push to the upside. Instead, what happened is price broke and closed below that area, meaning that the area that was supposed to serve as an obstacle has been broken. And more to that, we also have, not only do we have a break and close below this area, we also have a break and close below this area, meaning that we don't have any other obstacles until we start getting to these areas. So the moment I saw that during London session, all I expected was that price will play around this area and then push to the upside and come and test this area. Now, of course, you can see that as we were breaking this area, we did not leave behind a supply. So in that case, you just use the zone that was broken, you just use that level, and then you just place your stop loss right around this area, the highs here, because majority of the time, price will not break above that level. And then now, once you start getting that, you still expect the same thing. So for example, just look at how price has done this. The moment we broke below, it means that we're looking for sells. But as price was pulling back up, it is forming structure that looks like demand zones here. So you'll notice that if I can draw with rectangles, we have this one, of course. So we break below, that means we get a continuation down. we break below again, this 2 candle sort of like failed demand zone, and we still continue breaking below, right? We can see that that close is also a break below this week here. So that means we still have momentum to the downside. And the momentum is progressing because, as you can see, the moment we start breaking below and closing below, that means we have a lot of momentum. So right now we are picking up momentum. We are forming wicks, and then we are filling the wicks. And not only are we filling the wicks, but we're also pushing to the downside. Currently, we are having the same instance again of price forming a wick and then filling a wick. So in the next 20 minutes, we should expect price to at least close below this area here for us to experience a continued push to the downside. As I've mentioned, target is that we close right below that level that we've drawn on the hourly. So that's going to be how I'm targeting this trade. Of course, at the moment, as I've mentioned, I took partials around this area because I did not want to just have a repeat of yesterday whereby I did not take a lot of partials and then price came and stopped me out in profit. So I was better off just taking what I could, and then now I'm letting the rest run with stop loss just around above this high. And the expectation is going to be that if we can jump back to the 1 hour, expectation is going to be that we close below this demand zone, and then now we can continue all the way to the downside. So that's how I'm visualizing this trade. Of course, if we can look at confluence of the VIX, I will not always be going through VIX because I already explained what I look for it in VIX, but you'll notice that VIX has opened with a very strong gap to the upside. So I'll wait for this gap to be this cut. Because of this gap forming, that's why we've seen a very strong drop during London. And now probably expect a bit more of a rally to the upside before we eventually continue to the downside, which might mean longs during New York session. So that is my breakdown of London. Today has been a very smooth day. This week has been a very smooth day. And I'll look forward to even sharing more trades as we progress with everything else. So thank you so much. Cheers, and I'll see you guys in the next one. If I can show you guys a screenshot one last time of the trade that I just took. Seems like I've closed it, but you'll see it on my Instagram. So thank you so much. See you guys in the next one. Peace.